This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about the market trade action that we saw on Election Day Tuesday, and we will dive into some thoughts on that, I'm sure, as well as the WASDE report on Wednesday and much more. Bill Biedermann, agmarket.net, is with us today here on the show. Bill, always a pleasure to catch up with you, sir. Hope you're doing well.
Yeah, I am. It's beautiful weather, and there's no complaints from this part of the world.
Definitely. Well, I know beautiful weather. We've had a chance to wrap up harvest for many folks across the country, and I know we're going to dive into that a little bit as well as we kind of put the combines away for another harvest season and think about marketing plans. But just off the top here, Election Day Tuesday, I know we're watching that, but I wonder just your general thoughts on any impact we could see the elections have on the markets moving forward the rest of the week. It feels like, if anything, to me, it would maybe impact the macro markets the most, Bill.
Right. I think you're right, Jesse. And what's funny is the markets are trading in anticipation of a certain political party winning, I believe, and the expectations that that's going to really make the economy get in a much stronger position quickly. But that's not going to happen because macroeconomic policies are the way they steer the ship, right? You can't turn a vessel very fast. So it's going to take time. And I'm just worried that the market's going to have this buy the rumor, sell the fact attitude. And I'm talking about the stock market. So, I feel like we're pretty lofty in that sector. I do think that because the world is starting to steer their ship the same way we are by raising interest rates, we saw that in the Bank of England and a couple others this week, the dollar has probably topped. And so I think that's going to be good for commodities. Now add in that we're trading a record crop, right? And we're trading a larger carryover potential in the U.S., excuse me, and a record crop in South America. But it's been dry in South America for 4 weeks in Argentina, and Brazil's supposed to get a little bit of rain in the next 5 to 6 days. So that ought to help them. But Argentina's going to stay dry. So we could be looking at a situation where if we start to perceive a weather problem in the South America market and we see this lower dollar, it could wake the markets up.
Very true. And I that's a great point you make about the potential of a lower U.S. dollar and maybe finding a top in that dollar. That could be huge, I think, for commodities down the road here. I know as well we got CPI numbers coming up Thursday. I think that's another maybe factor that we could watch here. Maybe the macro markets, the stock market is pricing some of that in as well. On Tuesdays, we saw a little higher action across the stocks, Bill.
Yeah, we did. And I think that, the next thing the market has to interpret on that case is are we going to be able to see this radical change in direction? And I don't think you'll be able to do that. That's not the way fiscal policy works. So I think we'll see a sell-off coming. Now, will the money go out of stocks and equities and into commodities? Well, I think if we got a weather story, and I think if we confirm the dollar has topped, I think we could see. The corn market has a lot of support under it. There's a lot of end users that really need to get more priced. It was a fast harvest, so they didn't get a lot done. We've been topping up in that 690 area. We pushed up in towards $7, and we immediately in the last 5 or 6 days we've retreated from basically $7 all the way back down to the lower end of the range, which is 670. But there's two other points on that chart. There's another low of the bottom end of the range we've been in since September, down around 660. There's moving averages there. And then there's a gap way down there around 632. I don't think it's just a tiny gap. I don't think that's going to matter. But I do think you're going to see a lot of support in that 665 area near that moving average. And we'll see what happens. But I think that'll be I think that's where you'll really see buyers line up.
I would agree as well. And you mentioned some of those moving averages, and we've gotten down to start testing kind of that lower end of the range here. We've just been so range bound in this corn market, Bill. And you mentioned what you're seeing on the charts there. And you mentioned as well, it's been a fast harvest. So, now producers getting a chance to catch up and looking at this market, and it really hasn't moved a whole heck of a lot since they've been in the field. So I think this is a good spot where they're getting an opportunity to maybe sharpen the pencil a little bit and work on some risk management and look at their marketing plan, Bill.
Yeah, and I think that one thing that you should look at is the December is trading at roughly 670.
Yeah.
And you go all the way out to July and it's trading at 671. So there's really no difference in price. So if you got some cash flow requirements you would like to get filled, there's nothing wrong with selling the cash to, off of a 670 price. And then if you still think we got upside potential, don't give up ownership, just replace it out in July at 670. So you own it for 8 more months at the same price it's at today. So there's no storage cost. And so if you think like I do, think, okay, well, I could do that and I'd have the same penny for penny risk as owning cash. I'd give up my basis opportunity. But why not change it into like owning a three-way where I own it for like $1.20 up? Heck, that gets me up to $8. And then sell a put down around $6 to replace to fund that position. So I'm hardly paying anything for that position. And at the same time, I just reduced my downside exposure by like 70 cents, right? So to me, that makes a lot of sense. I'm still in an ownership right where we're at 670, but I'm in a not as much risk if the market goes down. And there's a real good argument, well, I don't want to lose my basis opportunity. Well, you can always buy a bull spread. That's what elevators and grain traders do day after day after day. They trade spreads to against basis. So, there's 2 positions you could put on. It takes very little money, not even half the money that it takes to store it, and you maintain your ownership. So I think and you have less risk, right? 70 cents less risk. So I think that's a really smart plan. And in fact, who knows who's going to get into office? We'll know probably by tomorrow. But that might even be a good plan for you to get some cash, go pay for a whole bunch of inputs, or get that new truck you wanted, right? And go from there. And you put yourself in a better cash position and a better tax position.
Soybean side, I know we were able to get above 14, and now we're kind of holding that 1440-ish range, I'll call it. Any thoughts there on the soybean market? Anything different stand out to you in those charts right now, Bill?
No, well, a bigger sideways range, right? I mean, like $15 to $13.70 is kind of the bigger paintbrush. We're kind of near the middle. We just kind of broke up above the middle in the last 4 days. And the fact that we're staying above that middle line or the median line, I think that's pretty encouraging. And I think this is going to go to, well, let's be cautious because the government's report tomorrow could be negative, right? Because everybody's thinking they're going to lower demand and even possibly raise yield. And at the same time, the most important thing, this is going to trump everything, is the weather. If this weather in South America fails to bring moisture, it's getting to the point where it's going to be serious.
Very, very true. Very true. WASD report coming up on Wednesday. I know traders going to be watching corn bean yield, also going to be watching the export side of the equation. I think that seems to be the general thought of where we could see any sort of surprise if we do. Would you agree with that, or are you watching anything else there, Bill?
Yeah, totally. I mean, like, we've lowered our export number by 25 million in corn from 2150 down to 2125. And honestly, you could argue to take a lot more than that off. I mean, our exports are running, close to 50% below where they should be. So, now having said that, we're just entering the export season for sales. So we're hoping to see that pick up. On corn or on soybeans, it's the opposite. We're nearing the time where our exports start to slow down and they get switched to South America. And so that's a concern. On top of that, the political situation that we're watching in China and the U.S., that's a real concern. So we think a lot of these sales, and there were a ton of sales made today, a lot of these sales are positioning just in case South America doesn't get rain, because they'll be at a higher price in a week. But if they do get rain and that continues to improve with the political situation we have with China, Jesse, it could very well see China cancel. There's a lot of guys in the cash grain industry that think that is a possibility.
Bill Biedermann with yeah. Bill Biedermann with agmarket.net is our guest here today on the show. Bill, this wheat market, you brought up earlier the dollar maybe finding a top, and I would have to think that that's definitely going to be good for this wheat market if it happens. Winter wheat planting pretty much done, it sounds like, or getting close. Conditions still fairly poor in the southern plains. And then on top of that, this Russia-Ukraine situation and the grain deal expires on the 19th. I know that's going to be another big issue that traders are going to start to hone in on after we get past the WASDE report and the elections. And that's going to be something that's going to weigh into all the markets, but into wheat very much, I would think.
Yeah, the wheat, especially because, I mean, when you look at that drought monitor for the United States, I mean, I know it doesn't matter. We're going into winter, right? But it's just staggering to look at. And so we're watching that, and we're watching, the Argentine wheat crop. That's going downhill too. So there's a few threats to future supply rather than seeing a big build in world supplies, which, everybody was hoping for. It doesn't look like it's going to happen right now. But the dollar could shift things back. But right now, Jesse, we are not the cheapest wheat price. We're by far the cheapest corn. So, people are looking elsewhere right now, and we're just hoping that things get really worse in another country, and we'll come out ahead.
Definitely. I want to circle back just in general as well. You brought up some great thoughts about pricing out to, say, July. Let's talk about 2023, though. Are you getting into a lot of conversations with growers about doing any sort of marketing for their 23 crop as we're just wrapping up this harvest season, Bill?
We are on corn and beans, not so much on wheat. I think I have one customer of my own that sold some July wheat for next year, and that was in soft red. But most of them, corn and beans, we've locked in quite a bit using some kind of like a min match where you put a floor under it and put a ceiling price. If corn goes to $7, we'd be happy to have that sold, but we sure don't want it to drop below $6 and not have stuff sold to at least cover our inputs. So we're really covered well on 23, and it didn't cost a lot to do. And, I got a floor at $6 with the recommendations our company has made, and I'm happy with that. I mean, we can't lose money, unless something really crazy happens.
Definitely. Well, just with so many different volatile factors out there, Bill, and I know you've seen this throughout your years of experience in agriculture and in the markets, everything goes up, stair step up, elevator down. And so it's, one of those things where will we see that same adage come to fruition here, 6 months, a year from now, 2 years from now? Hard to say, but protecting that downside risk is what I'm getting at. Is always important, and just with the way things are elevated right now, it seems ever so important in this market environment, Bill.
Jesse, I can just hear the kitchen table conversation when the kids are in bed. If we wake up someday, and this is going to happen kind of slowly and quietly, and then all of a sudden you're going to realize it happened, right? And that's where the fiscal policy to create deflation happens. We end up getting rain in South America, record crop. There's no choice but to see more acres next year, so bigger production. Carryovers start to grow and swell, and you look at each other, and that stinking question comes to you that you didn't want to hear. Well, why didn't you sell some? And that's a great question. You should. We've got puts, we've got calls, we've got things that you can lock in a profit and not worry about it. And if it goes up, hey, that's great. I mean, we're building strategies in so we have $2 on the upside open, or at least $1 on the upside open that we can gain. But if it goes down, we have no risk. I don't, it'd be crazy to not do that. And honestly, Jesse, that's what our whole conferences this winter are about. We're going to wake up someday and we're going to go, oh, crud, unless we've got it on. And then we say, oh, okay, that's it. And that's going to be the difference between a good manager and a manager that got caught not paying attention.
Very true. Very true. Livestock thoughts, just real quick. Anything different there? I know we have a few different things going on in both cattle and hogs, just across that protein sector. Tuesday, we gave back some of Monday's gains, but overall, I know a lot tied there with demand, both domestically and export markets, et cetera. Any thoughts that you have in this livestock trade right now, Bill?
Yeah, I believe 100% that this is just a technical sell-off in the cattle. I think that the Packers are trying to make it look soft up in the Corn Belt by bombing the price, but there's just no. I mean, they're buying cattle out west and down south, and they're picking them up within 3 or 4 days. So I think you're just seeing the games played. I think you're seeing a retracement on the chart, and I honestly hope it goes down a little more because I think it's a good buy. That's just my opinion. Our company has been pretty friendly, but not in the short term. The short term, we saw the weights coming up a little bit.
Yeah, and I think for our cattle ranchers and our hog producers, everyone there on the livestock side, they're just watching a few different issues and some of this ebb and flow and some of this retracement and technical buying and selling is. It feels like it's just going to be ongoing here, probably through the rest of the year, Bill, as we wait to see some different inflation data, et cetera, that weighs in. But overall, it just feels like we're kind of ebbing and flowing in this range right now, Bill.
It really does. I just don't really see a whole lot changing, not in the near term.
Definitely. Bill, I know as well. I wanted to mention this, give you a chance to talk about it. You guys just announced here recently you got your winter conference coming up in Nashville. I think we should bring that up a little bit. A lot of great speakers in the lineup and a lot of fun there. Can you talk about that just a little bit?
Yeah, it's gonna be right downtown at the Hyatt, so you're within a few blocks of going down and hearing some good music. We're gonna get there. Well, it's Sunday night, and there's an educational program Sunday afternoon, and then there's a cocktail hour and just fun social time Sunday night. And then we've got phenomenal speakers coming in on Monday, including David Hightower, Brian Burke, Matt Bennett, Brian Split, and hopefully we'll get to see you there if we can twist your arm hard enough and come and do your thing. That'd be pretty cool. So it's going to be a lot of fun, Jesse. We're looking forward to it.
I know that is in the works, and I'm looking forward to it as well. And as you mentioned, things starting Sunday night, February 5th at 6th in Nashville. And details can be found at agmarket.net is where you can get all the information. Bill, always a pleasure, sir. Before I let you go, any final thoughts for us on the markets or anything you want to reiterate real quick?
Just be thinking defensively so that you can be happy.
I like that. I like that. Again, find more information, get a hold of the team at agmarket.net very easily at that website, agmarket.net. You can find their phone numbers and a lot of great information. With that, Bill Biedermann, always a pleasure, sir. Enjoy the rest of the week, and we'll talk to you again soon.
You bet. Thanks a lot.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.